The stock market is trading at all-time highs, and the question is this exhausted? Are we due for a lower low and a push down here in stocks? And gold is showing some life here. After having pretty much a straight shot to the downside, we see a strong candle forming here, at least on Thursday's trading action at the time of recording this. We're looking at a 1.75% gain on the day. And look at that candle on silver, looking really strong here. The dollar index continues to break higher here following yesterday's Fed meeting, which we'll discuss in detail. And volatility remains muted, with a VIX pushing down around 2% today. As always in this video, I'll be sharing my personal trading ideas that I am looking at this week. And all I ask as we get started is that you hit the thumbs up button and subscribe if you're new. Let's jump in. So if you're a regular viewer of the channel, then you know I am already long the NASDAQ as of that big sell-off that we saw a few Fridays ago, and we are still in the trade. Things look pretty good here so far for the NASDAQ, despite some gaps higher here and a lot of traders thinking that we could come back and fill those gaps, which I think is possible. I do think that dips on the NASDAQ for now are dips that will likely be bought by the market. And in this video, I'll be outlining why, yes, the stock market is high. Yes, it looks like it is overbought, but I also think that it could continue to rally into year's end. I'll be making the case for why I think that is the case and how I plan to manage the trades that I have on that are very risk-on oriented at this time. I also want to preface that while I am very bullish on the stock market, cryptos, and risk-on assets in general right now, I'm not employing any amounts of leverage, and I would really seriously ask you to consider carefully what you're choosing to do if you are very leveraged in the financial markets at any time. By adding leverage into your trading, you're essentially saying, I know this is going to happen, and you're adding layers of risk that you may not even realize you're doing. In my personal opinion, I don't use leverage very much, and I think that leverage is better off left alone. Sure, it can help traders with small accounts grow quicker, but it can also multiply your account back to zero over and over and over, and a lot of people get caught in that trap, so be very careful with it. With that out of the way, let me talk about why I still think the NASDAQ, the S&P 500, Bitcoin, etc. can continue to rally higher this year. I've selected the NASDAQ here in our Edgefinder's AI scanner, and notice how all of our simple moving averages, we remain bullish, right? The 20 is intact, the 50, the 100, 200. We have clear signs of overall technical momentum to the upside. Additionally, we have seasonality that favors bullishness for the stock market and crypto market at this time. Let me show you. The 10-year average performance of the stock market in the month of November is usually very strong. And as we turn the calendar to November, I think this year is not the exception. That's my personal opinion. Of course, I could be wrong and I'll manage risk accordingly, but my best educated guess, which is, by the way, all traders can do, is that we probably continue into year's end with a strong rally that we have started this year. And I should clarify, we started strong, then we lost big due to the whole, tariff debacle, but then we have had just one of the most impressive recoveries that we've ever seen in stock market history. And I think that that momentum likely continues into year's end. Not only do we have technical readings that look strong, we also have fundamental readings that look pretty good for the US stock market. Let me explain. GDP growth in the US has been really strong. Just take a look at GDP growth relative to expectations. Your yellow dots are what the expectations of economists were. The blue bar that exceeds those expectations are what we actually got. So we got beats in GDP numbers that look really strong. So growth is still there in the economy. We also see this in retail sales, where the consumer continues to spend more than previously expected. And services PMIs remain relatively intact, all while interest rates for the United States are expected to continue to come down into year's end and into 2026. Not to mention, we have a deal that seems to be on the way between the US and China. This was one of the biggest overhangs to the stock market, and it looks like we're going to get an agreement pretty soon. US President Donald Trump and Chinese President Xi Jinping have met in South Korea, leading to a series of announcements on closer trade ties. Trump says the meeting was a 12 out of 10, and Beijing says the results were hard won. Here's some details. The US will cut the quote-unquote fentanyl tariff on Chinese goods from 20% down to 10%. In return, China will start the purchase of massive amounts of soybeans, according to the president, and China says that they will make it easier for the US to buy rare earths. In return, China says the US will suspend an expansion of export controls on foreign firms listed on the entity list. Trump says a US-China deal could be signed pretty soon, but there's no ink on the paper just yet. And stringing all of these things together, this is why I think we could continue to see the rally persist into year's end. It doesn't mean we won't have any dips in between. We might get a couple pullbacks in between now and year's end. In fact, that's probably what's going to happen, is you're going to get some pullbacks, but my opinion is they are likely to be bought. You have trade deals, Fed rate cuts, strong corporate earnings, economic growth, and momentum plus seasonality, which are all in favor of the bulls right now. Now, something could come out of the woods and just completely blindside this idea. And a month from now, this could look like a totally moronic case. But we don't know that, and we don't have that information in front of us. As traders, we have to trade what's in front of us, not what we speculate might happen or something that we can't really predict, right? Sure, something could happen in the Middle East. Something could happen between China and Taiwan. We can't predict that. What we can look at is we can look at our knowns and we can say, this looks pretty good for the current outlook on the stock market. So with risk management in one hand and bullish setups on the other hand, I'm looking for upside in the stock market. It also doesn't hurt that all of this stuff was scanned and monitored by the Edgefinder's AI scanner, which screens technicals, institutional activity, sentiment, inflation data, jobs market data, and economic growth data. It then generates a technical report with an overall bias, targets, and some technical readings showing things like volatility and moving average conditions. And if you don't have access to the Edgefinder, then now is a really good time to pick it up, considering we just kicked off our Halloween sale and our lowest prices of the year. Get spooky low prices. You see what I did there? For a limited time, get 45% off by sending us a direct message on our website. You can scan the QR code that you see on your screen right now, or click the first link in the description down below to speak directly to a member of our support staff and take advantage of this deal before it ends. And if you're someone who regularly watches my content, you probably understand just how powerful macro, momentum, and crowd sentiment can be in helping us spot opportunities in the financial markets, or at the very least, making more informed decisions about the trades that we're taking. So don't miss your chance. Pick up a copy for a limited time for 45% off. And again, you can find all the details in the description, or click the first link in the description below to speak to a support team member. So now that I've outlined my bull case on stocks, let me explain some of the recent position changes that I've made. So obviously I am still long the Qs, and I've given back a little bit of the gains here with this recent pullback. But again, I'm not too worried about a pullback. I think actually that's healthy. You've had pretty much a one-shot move to the upside, and I do think we could actually fill some of the gaps here on the QQQ, which is the ETF that I'm long. I would not be surprised if we did actually see some pullbacks to fill some of those gaps. I've seen a lot of traders saying, hey, we've left a bunch of gaps open. Are we going to go back and fill them? And my response is, maybe. I don't necessarily want to make a bet that that's going to happen, but I wouldn't be too concerned unless we started to break that prior all-time high. If we do come pulling back into that area, I'd like to see a sharp reaction from it. Now, again, I don't want to make the call that I think it's going lower in the short term. I'm not making that bet. I think, for now until the end of the year, I won't be placing any short trades. My only bias would be looking for continued long setups. But I won't be adding anything to my NASDAQ trade as I already have a full-size position, and my game plan here is to only stop out or trail out for a profit if my trailing stop gets hit. I'm also long the Russell ETF, which is the IWM, and I also just got long the Bitcoin iShares, and I just got long the iShares Bitcoin Trust ETF, IBIT, with a stop loss below this weekly level of support that we see looking left. Here it is on Bitcoin spot price, and you can see overall we've got this nice momentum there building the last year and a half, 2 years on Bitcoin. And my thought process here is we've got this uptrend, we've got support looking left, and if this breaks lower, I'm just going to take a quick loss on it. But I do think that we have some seasonality that also favors Bitcoin in line with the stock market. You can see Bitcoin is getting a bullish overall score here with a +5 bullish reading. And searching up Bitcoin here on our full year seasonality, we can see that historically there is a strong rise into year's end in the last 10 years for Bitcoin. And again, I want to clarify that this does not guarantee that Bitcoin is going to go up. It's just about historical data and backing things as much as we can with as many examples or things that we can in our favor. We never have certainties as traders, and this is one of the most common new trader mistakes, is thinking that some indicator or some tool is going to guarantee what's going to happen next. It's never the case. All we as traders are doing is making educated guesses and managing risk accordingly. Unprofitable traders or people who really struggle in markets, they don't ever get both of those things right at the same time. They might get the right tools or indicators all set up, but they risk too much and blow it up. Or vice versa. Maybe they are having good risk management, but they never actually build a system that has an edge. This is the importance of stacking things in our favor to build confluence and more profitable opportunities in markets. Rely on the idea of good back testing and probabilities in your favor.
Well, I've been doing my back testing. I've been trading for a while. I'm finally qualified to get a payout. Let's do it.
All right, move over, you bag of bones. I've been funded with Maven for a little while, and it's time to request a payout. Watch this. If you're looking to get funded, check out Maven Funding down below in the description. With our promo code, as you see on the screen right now, you can get an additional discount off of any of their challenges, and they offer some of the fastest payouts in the industry. Not only do they offer really fast payouts, they also have some of the best prices in the industry by far. So if you're looking to get funded, check out Maven down below in the description. And the dollar index continues its move higher here following yesterday's Fed meeting. So here's a few things that I took from Powell's speech yesterday. The first thing is I would call this event a hawkish cut. Specifically, yes, the Fed cut interest rates, but it was done in a way that signaled that future rate cuts are not a certainty. Powell mentioned that the committee, which is of course the team of people who make decisions as to what to do next with interest rates, is divided. He specifically mentioned that there is a variation in biases amongst the Fed. There are certain committee members that are more tilted towards focusing on inflation, and there are others that are more focused on the jobs market. And I thought it was interesting that he did mention that bias plays a role at the Fed just like it does the rest of us. The Fed is dealing with a difficult circumstance given that we have rising inflation. Although it's not been as dramatic as people had feared, we still have sticky prices at the same time as a jobs market that could use some assistance. But yesterday's announcement was perceived as more hawkish than expected, signaling that the Fed is still debating as to whether or not a rate cut in December is necessary, whereas the market itself has been thinking December rate cuts are a guarantee. And this is what causes volatility for traders. This is where uncertainty is where traders have opportunities. If everything was certain, markets wouldn't move very much. And if you've been watching my channel, then you know I am still bullish on the dollar and have been for a little while here. I actually, however, just closed out of my UUP position for a profit at this level of resistance here, just took it off the table. However, I am still long the dollar Swiss franc. I do think the dollar has more upside, but I have quite a few positions on right now and needed to free up some positioning size or cash in my portfolio. So I sold UUP for a profit. And you can see several major currency pairs are rolling over against the dollar here, like the euro dollar, which is sitting at a level of support. I'm curious to see how we react to this area if we actually start to break through that and head lower. However, when I look at the euro US dollar on the edge finder, we're getting a bullish reading, so this would probably not be a trade setup that I take. Here's a look at pound dollar, which is getting a -1 score, which is not a very strong in either direction bias. Here's a look at dollar yen, which is getting +3, still not very decisive. And dollar Swiss is getting a 0 at this time. So I really don't have any setups that look prominent on the dollar at this time. Meanwhile, we can also take a look at gold. Gold is showing a -1 score and continues to be kind of a boring one for me when it comes to the edge finder's bias. We have mixed reports. You can see the overall long-term momentum still favoring the upside as the 200, 100, and 50-day moving average remain intact, though we've lost that 20-day moving average. Growth metrics in the United States have been strong, poised for a stronger US dollar, which could weaken gold and silver. We've also lost the 4-hour and daily chart uptrend that we were in previously. And when we look at gold prices, you can see here is that moving average combination that I mentioned. So the 20-day moving average, we are below it now. I still think that we could see some further downside in gold prices, especially if a trade deal is agreed upon. I think you're getting a little bit of a boost to the upside here on uncertainties surrounding that trade deal, given that we didn't sign anything just yet. But I do think that if that deal is signed, the gold price could continue to roll over. So I don't have any trades on in gold, and I'm very neutral on it. I wouldn't call one way or the other personally. Though long term, the trend is still intact and still looks bullish, especially if we got bigger dips. I would definitely be interested in potentially adding gold for the longer term. I've also been mentioning in my videos that I'm watching oil prices to the upside and continue to do so. I don't love the momentum just yet. In fact, if we look at our new scanner, which by the way, I'm loving this new feature, it adds a little bit more technical variance to the Edge Finder's report. That's one thing that we've heard from a lot of our customers and plan to continue to add into year's end and into 2026 is more technical stuff within Edge Finder. So check out this section here. Now we have some targets targets, which this is definitely bugged. We have 3 targets for the same level, so ignore that. But for the rest of we'll get that sorted out pretty quick. We are still, like I said, finalizing this section, but we just added this new feature where we can look at moving averages and we can look at volatility. So check this out. What we can see is the average daily move in the last 7 days, about 1.55%. And the average daily move, however, in the last 90 days, about 1.29%. So we would call this moving with high realized volatility in recent time for oil prices. This can be meaningful if you're a trader looking for that volatility. If you want bigger moves, you might look for things that do flag higher volatility. And so I do like oil to the upside, but I'd be looking for some of these moving averages to furl higher here and maybe start to point bullish. Part of the reason for that is I think on this chart, I just don't love the downward structure here. And I kind of got burned once already on oil prices recently. I didn't lose a lot of money by any means, but a little bit of a heartbreak for me where I went long oil prices right around here. I know it's a little hard to see on the daily chart, but this break retest, I bought right into oil there. It shot to the upside. I trimmed my stop loss and took a small loss, but still it was a heartbreaker to watch oil fake me out there. So I'd love to look for that similar setup. Again, it didn't work out here, but just because a setup doesn't work out once doesn't mean you never trade it again and you change the entire strategy. I'm just looking for another example of price showing clear signs of a breakout above this downward structure and specifically above the $62 a barrel price. If we can get a breakout, I'm looking for pullbacks and I'm looking for continuation. If you know my channel well, then you know I am a momentum trader. I like to trade in the direction of macro and momentum. And right now, the macro sort of suggests to me that we have upside in oil, but the momentum is not quite ready yet. So I'm watching it close. And if I take that trade, it will be shared inside of our Discord group as all of my trades are. If you'd like to get notified anytime I take a new position, you can join us inside of the Discord currently for a huge Halloween discount, just like the Edge Finder. You can get 45% off clicking the first link in the description down below. If you're already an Edge Finder user and would like to get access to our trade alerts, you can add those to your roster there. Simply click the first link in the description below.